Hello and welcome to the latest edition of the Sharesify podcast. I'm joined, as always, by Steve and James. How are you, gents?
All good.
Hey, Ian.
And it may have been a short week in terms of trading days, but it's been a busy one, and you've been particularly busy, Steve. More tech. What's caught your eye this week?
Yeah, some startling results. I mean, I think the common theme here is that results have been almost exclusively above expectations, and there's been a very strong undercurrent of guidance, confidence, and lifts as well. Standouts. I mean, AMD, the chip designer, some really strong, confident commentary about the CPU side of its business and how that's feeding into the data center environment. Its share price rallied about 20% over the course of this week. We had a really outstanding performance, but we've had a mixed bag in terms of share price performance, and that's largely, I think, because of valuations. So we had ARM overnight. On Wednesday, we had earlier in the week, we had Palantir, obviously the big kind of software side and analytics side of the AI trade. And both of those, their share prices were a bit weaker. And I think when you're dealing in PEs of, 90, even triple digits, which you are with those two companies, it's not unrealistic for investors just to take a breath. But I mean, their commentary was so upbeat and so confidence boosting. It really does lay a foundation for multi-years of strong growth. But execution is going to be the absolute crucial differentiator, and any weakness in execution is going to be seized upon by bears. So you do have to really be a bit open-minded about the kind of risk you're taking on with these companies. There's a lot of upside, but the downsides could be pretty steep and sharp periodically if they miss numbers and feel that their commentary is a bit weak.
Yeah. James, can I tempt you into JD Sports? Can I lure you in?
Yeah, absolutely. So a good little run since Wednesday's results, which weren't
There you
I
great.
see what
go.
you did there, James. Good
There
little
you
run.
go.
Yeah, exactly. Positive strides. They weren't great, but I think with the shares were at 5-year low, so I guess it's all about positioning. Things aren't getting worse than the market feared. They also bumped up the dividend by 20%, and they're in the middle of a fresh 200 million buyback. So now the board obviously think the shares are undervalued, but they did say the athleisure market is expected to remain muted in the year ahead, and they've provided very wide profit guidance. So with that kind of youthful shopper feeling the pinch, it's going to still be a sort of hard yards for that company. And then across the pond, absolute howler from Whirlpool. I don't know if you saw that one, Ian. So cut guidance in half, suspended the dividend, and they said the war in Iran had resulted in a recession-level industry decline in the States as consumer confidence collapsed. So that was one really worth noting. Yeah, I guess it all kind of speaks to this K-shaped economy with the more affluent continue to spend on travel, services.
I wonder if James, I mean, with Whirlpool, I mean, we all know them as sort of the white goods manufacturer, and I guess they're not really at the premium end of that. You've got your Bosches and your Zanussis and people like that, perhaps more at the higher end. I wonder if it's a case of at the lower end of the socio-economic bracket, spending is becoming a bit more constrained, and that's what we're perhaps seeing is that spending at the lower price range is maybe going to be a bit more under pressure.
Yeah, exactly right, Steve. I think it is that K-shaped consumer economy with the people at the lower end, pulling back on particularly big ticket purchases.
Yeah.
We talked a little bit about air fryers, didn't we, on Wednesday? But how
did,
were
yeah.
those numbers, James? Shark Ninja.
Yeah, Shark Ninja actually they beat expectations and raised the outlook. So a bit of a contrast there with Whirlpool in the kind of home appliances space. And also a lot going on in investment trust this week. So Herald has moved to Aberdeen with Katie Potts continuing as manager, which is a nice creative solution there that looks like Saba are going to exit via a tender offer. And then Seraphim Space raised 137 million in that C share issue. So that's actually the biggest fundraising in the trust sector since BH Macro in 2023.
It's really got some good impact actually when you did that podcast with their CIO, and it was it seems to have gone down really well with listeners. So evidently the space economy is something that's touching retail investors. They're clearly intrigued by it and want to know more.
Yeah, that's right, Steve. And one of their portfolio companies, Hawkeye 360, that company soared in debut deals in New York, and then this week, Filtronic, which has been absolutely amazing, stocks up, I think, about 4,000% over 5 years. So, that's really gone to the moon. Up again this week on no news, but I guess investors are piling into everything space related, and it's actually a supplier to the Starlink constellation. So
Yeah,
lots of buzz around that one.
that's the thing that was worth pointing out to retail investors if you're not really sure. I mean, this massive lurch it's had over the last 18 months or so is all down to SpaceX. It's signed some very, very large contracts with SpaceX, and it tilts the risk very much towards SpaceX. It's going to be its biggest client by an absolute mile. And so that's something to bear in mind. Of course, SpaceX looks like it could be spending billions and billions of dollars in the future, and maybe that's a good thing. But if it does reel in its horns or chooses to spend elsewhere, it could be a real calamity for Filtronic. So that's something to bear in mind with that company.
Yeah, absolutely. Well, I'll bring you guys back down to earth. Two of the biggest, dullest names in the FTSE reported this week, Shell and Diageo. Now, Shell, unsurprisingly, oil prices where they are, gas prices where they are, beat forecasts. Stock went down because it was the very day that hostilities ceased in the Gulf of Hormuz and the oil price came down. In fairness, they did also cut their Q2 production forecast for gas and oil because Qatar's a big gas producing area for them. But that to me just makes the decision to buy that Canadian ARC business even more interesting. And I kind of looked at the valuation of Shell. It's starting to look interesting. Analysts have only penciled in a $75 oil price for the whole of this year. Brent crude's back over 100 already. And if the oil price stays higher for longer, this stock's going to beat estimates quarter after quarter. They're still buying back shares. Jury's out for me on share buybacks, but they're still buying back shares. And the other one's Diageo, which actually posted better, didn't it, James? Posted better Q1 organic growth than people were going for. And they say Drastic Dave, as we call him, as Dave Lewis, the new CEO, says that there are measures already in place to correct the lack of competitiveness in the States. And I hear on the grapevine that there might also be a swathe of job cuts. So he'd be living up to his nickname. But if it makes the company more responsive and leaner, at this valuation, it starts to look interesting. It's not a growth business, but you're looking at 12 to 13-year lows in the share price before those results. And it will start to come onto investors' radar, new CEO, addressing shortfalls, valuation. You can imagine the deep value guys will be running the rule over this stock.
It's interesting as well with Diageo. I mean, I know the company particularly well. I mean, I drink a lot of Guinness, and I know they had some real supply issues last year, and I couldn't quite get to the bottom of why the pubs just literally running out of Guinness. And you've got the World Cup coming up, obviously, next month.
Yeah.
And that's going to be longer than ever. It's going to be a 6-month football tournament. So there's going to be lots of people in pubs watching football. If they have any supply issues, that presumably is a risk that the market might not be pricing in.
Yeah, I guess so. But I mean, it would be great for demand if hadn't even thought about that actually, Steve. World Cup and demand for beers. You've still got a couple of tech names. I mean, it's really winding down, isn't it? But you've got a couple of tech names tomorrow. Next week.
And of course the biggest of the lot, Nvidia, will be due out in maybe 3 weeks or so. They have a January year end, so they always are a little bit behind other companies.
Right.
So I mean, the markets will remain poised and on edge until those numbers come out. But I mean, next week there's some pretty interesting ones. There's Applied Materials, for example, very much in the chip space and the infrastructure side of things. And Cisco Systems, a very interesting company. It's had a really good run this year, but can it again tell a story, a convincing story about it's part of the AI trade? It's got long-term durable growth ahead of it, or is it not really part of the AI trade? So that's something always to bear in mind. Those numbers are out after the market closes on Wednesday next week.
Yeah,
and I know you two been looking ahead to next week as well.
Yeah, well, you've got a few to get your teeth into, haven't you, next week, James?
Yeah, very busy on the consumer side again. So we've got Burberry, which we haven't heard from since January, actually. So it'll be very interesting to see, their thoughts on the luxury sector as the war put the pause on the recovery in the space. and how's it impacting kind of tourist spend and that sort of thing. We've also got Compass on Monday, which is the food service giant, a winner from the kind of outsourcing trend. I think the last time they reported organic growth had slightly slowed, so that's one to keep an eye on. And then there's a slew of other names like Angling Direct, Watches of Switzerland, Premier Foods, and Vertu Motors. So, very busy week.
Great. Well, look, all that to look forward to next week, guys. Thank you very much for joining us. I think that's us for today. We'll wish you a pleasant weekend. And as usual, if you've liked this, please like and subscribe on your favourite podcast channel. We'll catch up with you next week. Cheers.
Bye.